4 tips for investing in cryptocurrencies. Hey guys, this is Mark from Mark Melbourne TV, and I'm going to cover a couple strategies when investing in cryptocurrency. So tip number 1, research. Guys, I would recommend you do as much research before you invest as you can. So cover as much as you can in a holistic way. So, okay, what assumptions am I making? Is there an actual need for this cryptocurrency? It's much like Kickstarter, right? So there's a lot of ideas out there, but how many of these ideas actually end up in execution where the end user actually adopts and uses this technology? So look at things like the white papers from these cryptocurrencies. Follow groups on Twitter. Follow any subreddits for these groups if you can find them, especially the ones that are active. I would look at really testing my assumptions. So am I just investing in this because there's a lot of hype around it? Is there a lot of news around it? When I started out, I did do research. However, a lot of the times with cryptocurrency being a new space, there isn't that much information for a lot of these altcoins and newer technologies. So the tendency is to invest money or follow someone else's strategy rather than your own, which brings me to tip number 2. So tip number 2 is develop your own strategy. So it doesn't matter that you might not have as much knowledge as somebody else. If you've got a strategy that you can stick to, you're more likely to come out ahead. Having your own strategy means looking and evaluating the risk and rewards. So cryptocurrencies are already inherently volatile and risky investments. So if you've got a belief that cryptocurrencies might not just completely die and go down to $0, you're sort of kidding yourself. Even though it's unlikely, it's a very real risk that these investments can end up pear-shaped and not work out. So look, always have that in the back of your head. And while I'm not I don't say this to discourage you from investing in cryptocurrencies, but it is something that you should keep in the back of your head. When you evaluate risk and reward, you should also evaluate your own. You should also have a bit of self-awareness and your tolerance to risk. So invest an amount where you're going to be able to sleep at night, even if that investment halves or worse. And just be sensible, right? Don't put all your eggs in one basket. Generally speaking, the larger a cryptocurrency or an investment or asset, the less risky it becomes, right? So generally speaking, things like Bitcoin that has first movers advantage and has the largest market capitalization is going to offer less returns than some of the other ones that are sort of more lucrative, where you might see 10x or even 20x in a very short time frame, so 2, 3, 4 months. The 3, I would say, is cutting your losses early. So don't become married to a cryptocurrency. So you might have done your research and thought a certain cryptocurrency was a good idea to invest in. You've put your money in there, and even though you've invested X amount of money, and that was part of your trading strategy, you need to sort of see it for what it is. If the news and the hype around it was the only real reason why you've gotten into a cryptocurrency and it started to drop off, you need to sort of draw the line where you go, okay, I'm not going to invest any more money into this cryptocurrency. What I would recommend, and there's an idiom for this, and what I wouldn't recommend, and there's a saying that goes, don't throw bad money after good money. And what that means is, don't try to invest more money into a bad investment in hoping to recoup your losses on your original investment. Tip number 4, limit your trading. So when you first start out, cryptocurrency is, like I said, inherently volatile. It's going to go up and down. And 1 month in cryptocurrency often feels like a year in any other investment. So compared to the stock markets, you see returns that are phenomenal and sometimes just really difficult to comprehend. So look, I would definitely limit your trading. So even though everyone knows the right thing to do is to buy low and sell high, often the reason why we first get into an investment is because of a recent pump or rise where media releases come out, there's news, there's speculation, there's hype around development, which leads to FOMO or fear of missing out, and you'll get into an investment when it's much too late. If you're going to invest in something, invest in it while there's no attention on it. However, you know and believe that there's potential in it. So while everybody else is buying the hype, you wait for the opportunity and sell into buying pressure rather than buying when there is a lot of selling pressure. Okay, guys, I hope there's a couple of tips there you can hopefully learn from. I've made a lot of mistakes in a lot of the scenarios, and this might be one extra tip for you. So tip number 5, sometimes holding and doing nothing is a strategy that works best. So again, sometimes holding and doing nothing is the correct thing to do when, even though your tendency or the urge is to sell or to buy. And I guess, look, with time you'll develop more experience. But look, as I said, the 4 tips I've covered: do your research, evaluate the risks and rewards, know your own tolerance as well. The third one is cut your losses early. If an investment is going bad, don't throw good money after bad. And fourth and lastly, limit your trading. Only do so much investing. Thanks for watching, guys. If you haven't already, I've made a couple other videos. So I've got one on how to buy Bitcoin, and I'll be releasing a video on how to buy Ethereum as well as some other cryptocurrencies if you're interested in that. Leave some comments, like, subscribe. See you next time.